Entries are very often overcomplicated within the trading community. So today I'm going to be showing you the only two confluences you'll ever need to execute on your trades. So let's get right into it. Now I know that you're here for the entries, and trust me, we're going to get to that very, very soon. I just want to impress upon you the importance of having a trade framework set up before you go ahead and execute. This is the only thing that will allow you to execute with as much simplicity as I'm going to show you. So it's important to build your trade framework first. Personally, my trade framework is very simple. I wait for price to sweep out some kind of liquidity, and then we go and target some kind of liquidity as well. And all of this takes place within the kill zone. So this purple box represents London kill zone. And then I just make sure that I do that within a higher time frame trend. So let's say this is on the 4 hour. I look for this within these 4 hour legs that I just drew a line next to. Okay, so that is my model very, very basically in a bearish example. So let's look at a real life example. Taking a quick look at the dollar index, you can see we've had an impulse to the upside and price has formed this bullish order block, right, by closing above these last three down candles. So we're forming bullish PD arrays, so the 4 hours in a buy program. We have also disrespected this bearish FVG here, right? This candle closed through it, and that now makes this a bullish inverted fair value gap. So we're forming bullish arrays, disrespecting bearish ones. We're in a buy program. You can see that we have two levels of relative equal highs here within the leg. So we have liquidity to target. Now correlating this with Euro USD, that would mean that I'm looking for lower prices on Euro USD. You can also see that we have this low resistance liquidity down here. Right, we have these three equal lows and we have this external range liquidity. So that's the higher time frame context that I'll be looking to sell within. And now in terms of the intraday, we're looking for that liquidity sweep and liquidity target. So if we go on to the 1 hour, you can see that price formed this bearish inverted fair value gap here. And we closed through with this candle and price is currently within there. So that's the sell zone. And in terms of a liquidity sweep, right, you can see already that price has taken out these old highs. Right, and as a target, maybe you could target this external range liquidity, but in reality, right, it's going to be these higher time frame equal lows that are the main target. So now we have the essential framework of the model. The last thing before we get into the entry is the timing. Like I said, it has to be within the kill zones. So I use something called daily cycles for the kill zones. Now, essentially, this daily cycle, I wanted to see London impulse lower, which is the purple box. And then I wanted to see New York continue from that purple box, right, and go and form a new low. Now, there is a variation of this daily cycle where I play it within the first hour, and this is exactly the cycle that I was looking at today, right? So that's exactly what I anticipated timing-wise. And if we go ahead and put the kill zones on, you'll see that that is exactly what is setting up, right? You'll see that London impulse to the downside, New York has now retraced into the inverted fair value gap, right? And it looks like price is now going to continue to the downside. That is what the daily cycle says. You have the framework, the liquidity target. Now it is time for the bit that you have been waiting for. Now it is time to get into the two confluences that I use for my entries, and they are the only two confluences you will ever need to execute on your trades once you have the framework. So let's get into this. The first one that I look for is called a CSD. It stands for change in state of delivery. Some people use break of structure, some people market structure shift, some people change of character. I use CSD and I believe it to be superior. So essentially what we're looking at is, first of all, what is the leg that takes you into the sell zone actually doing? Okay, what is price doing? Well, clearly we're forming bullish PD arrays and we're respecting bullish PD arrays to the upside, right? We have this little FVG here on the 5 minute. Potentially you would look at the fact that price has formed this bullish order block that has also been respected to the upside. We then form this bullish order block that is respected to the upside. We then form, this bullish order block, and then we reach the sell zone. So then once price is within that sell zone, we're looking for this to switch in order to be confident in the trade, right? And you can see here that we go from forming bullish PD arrays to now forming bearish ones, right? Price closes below these last three bullish candles. That is a CSD, and it shows the switch in order flow. Price has gone from bullish arrays being formed and respected to now bearish arrays being formed and respected. That is the first confluence that I need to look for in order to execute on my trades. The second confluence that I look for is displacement through a swing high, or in this example, a swing low. Now, if you don't know what a swing low is already, essentially we're looking for candles that look like this, right? We have a three candle formation where one is the lowest in the middle and we have two either side. I'm looking for price to displace and close through that swing low, right? That is essentially what I'm looking for when I say displacement through a swing low. That is the second confluence. So what do we have here? Where can we identify a swing low? We will see here, we have this low here, and we have this low here. In between that is this low, and it's beneath both of those. That is a swing low. So we're looking for price to close beneath that low in order to go and basically check that off the list, right? Complete that second entry criteria. Now, the reason that I do this is because the CSD alone is less probable than a CSD plus displacement through a swing low. You'll notice you get CSDs without the displacement, and sometimes they fail, right? So to avoid that, to keep the win rate high, this is what I use. So now we have displacement through the swing low. You can see this candle here closes beneath it, and we have the CSD, right? Because these 3 or 4 bearish candles close below these last 3 up candles. So you have CSD, displacement through a swing low. These are the only 2 confluences you'll ever need to execute. And look exactly what this trade did. I took this trade yesterday. I'll put the execution up on the screen. You can see this was my entry. I think it was a little, I got in a little bit higher than that. It was like 603 or 605. My stop loss was 7.2. All right, so that was my stop loss. I remember it because it was yesterday. And yeah, that was my entry. And I simply targeted a 1, 2, 3 risk to reward. So all being well, the daily cycle is going to play out, right? We're going to see that London is respected and New York session then continues from London and goes to form a new low and a bearish session. So we've got the entry, the only 2 confluences I ever use for my entries. We have that, and you can see that price then goes to melt off well past the target, right? We go well past the target. And like I said earlier, really the main target is these equal lows. And you'll see that later on in the day, we do go and reach for that. That is outside the session. Nevertheless, we still reach for that. Now, what I've actually done for you is I've broken down this exact model into 4 simple steps and put it into a PDF that you can download completely for free. So I'm going to leave a link to that in the description. And if you want to know more about these daily cycles that I use, I have 7 or 8 of them, then I'm going to leave a link in the description where you can go and find more info about that as well. So yeah, I hope you found value in this video, and I'll catch you on the next one.